Hi guys, Joe here, Total Income, and I'm going to cover a very common question that I receive, which is how much money do I need to start trading Forex? So, but before you start investing your hard-earned money, I'm going to share with you a few pointers to take note of. Yeah. So the first one is only use money that you don't need in the near future, meaning you should have an emergency fund. So what are emergency funds? Is basically money that covers your living expenses, like your bills, your groceries, and yeah, things like that. Okay, so which means that, for example, if people have 3 months of emergency fund, if let's say they are retrenched, they are out of job, they have no income, that emergency fund will actually so-called provide them the relief that they need. So they know that 3 months they can go without any income. So that is emergency fund. So always have an emergency funds first before you actually invest your money or money that you don't need in the near future. You don't need in the next month. And maybe, these are excess, so-called extra money that you want to grow. Okay, so use money that you don't need in the near future. But if you know that this money, you are already tight, okay, do not use that money to trade Forex. And one more thing, that if you are in debt, do not see Forex as a solution to get out of your debts. Okay, this is very important. If you are in debt, my advice is find a way, find a solution to deal with your debts first before trading Forex. Do not see Forex as a way out of, your debts or a way out of your loss of income. Okay, so only use money that you have excess. And the question will be, how will you feel if you lose all of this investment? So for example, you want to invest $1,000 into Forex, but if you lose all this investment, let's say you lose $1,000, how would you feel about it? If you say that, okay, I'm still be fine. Okay, of course I do not want to lose that $1,000, but if worst case scenario, I'm talking about the worst case scenario, that you lose all your $1,000, how would you feel about it? Ask yourself. Only you have the answer. And if you know that you are going to be distraught, then that is not a comfortable amount for you to invest. Okay, but if you say, like, let's say if I put $100, okay, I don't mind losing that $100 in a way, then yes, that's the comfortable amount that you should invest in. Okay, that, so basically, how would you feel if you put this X amount that you have intended to invest in Forex? Okay. And the next one, before you put in your money, you need to be consistent and confident with your trades. So I know for new traders, they would not know about this, but there's always a demo account and you can always back test. Okay, I always emphasize this with all the students is that you need to know that you are consistent first in your back testing, meaning you test your strategies in the past historical prices, okay, and then you are confident that they have given you a return with your trades, okay, with your strategy. Then you put in the X amount of dollars that you want to, okay, and always understand risk and reward. Okay, like for example, we risk 1% to gain 2%. Okay, and then you know that in each trade you're going to only lose 1%. If that is the one that, if you are conservative, you only want to risk 1%, always keep to that trading plan. So if you have $100, you know that you can only lose $1. That's it. Okay, so if you know or you understand risk and reward in Forex, it is not that risky if you know what you are doing, and then the upside is there for you. Okay, so this is very important before you want to start to invest. Okay, these are the pointers that you should take note of. Okay, do not see, again, I want to emphasize, do not see Forex as a way to get rich quickly. There's no such thing as getting rich quickly. Okay, it's all a process. Okay, and also some brokers will have a minimum investment. Minimum investment meaning that before you, brokers will be your Forex brokers where you place your trade with, who you place your trade with, and some will have minimum investment of only $50, some will need $200, so on and so forth. So it depends on your broker as well, on how much is the minimum investment that is needed to start your initial investment. Okay, so now I want to talk about how to do the calculation, right? Okay, so for example, we see this chart. Let's say you buy around this area and then you reach this area here and then you take profit, right? So this is, okay, sorry. So let's go to this example. Okay, so for example, if let's say you decide to sell here, okay, and then you take your profit here, Okay, so now we're going to do calculation on the profit calculator for GBP, JPY. So this is how you can actually calculate your profits. Okay, and then this is roughly, some people know how much can I win, how much is the amount. So this more or less will share the amount depending on your lot size. Okay, lot size is basically how much you want to invest. Okay, one lot I think is equal to 100,000 of the currency or 1,000 of the currency itself. Okay. I will have more details later, but now just to share, lot size is basically the initial investment that you want to put in. Okay, so for example, this JPP, JPY, we want to sell, and then we see that our price was 131.344, 131.344, and then let's say you take profit at 130.698, 130.698. This is if you win, right? And then if you have a lot size of 1 USD, okay, that means you put one lot in, then your profit is $597. This if you have one lot. But then again, some of us may have little investment. So what we do is we need to calculate our profits, our position size. So for example, this is the trade that let's say we go in, okay, we risk 38 pips. 38 pips are points, yeah? Pips are points that moves. So each point that move will be 1 pip. I have more details in my online course, my free online course where you will learn all these basics. But for sake of this, to shorten this video, I just want to share with you how we do the calculation. So for example, you have 39 pips, okay, 39 pips. So how do you know how much lot size you should put? Let's say you have 39 pips. And then if let's say you have $1,000, okay, you risk 1%, you see, account size is $1,000, risk ratio, you only risk 1%, your stop loss is how many pips? 39 pips, meaning in this trade, if you lose 39 pips. When we use this indicator, this instrument here, we know that we're going to lose about 39 pips. If we lose, that will be 0.02. Okay, so if $1,000, if you want to risk only 1%, it will be 0.02. So you key in here 0.02. So if you win that trade, you will win $11.90. So this is how we calculate. So some people want to know how much can I win in each trade and so on and so forth. This is how you calculate your lot size. So some people say, oh, 0.02 is a bit too small, right? Because I only win $11. But just now, if I have one lot, then I can win $597. So that's why some people, even with a small account of $1,000, instead of putting lot size of 0.02, they start to just put lot size of 1, right? $597. So if they win, yes, that's why they can get the $597. But if they lose, what happened? They will lose almost half of their account, right? $1,000. If they lose $597, they will lose more than half of their account. That's why many people blow out their account. So that's why it's very important to keep your risk reward ratio. So if you say 0.02 is small, then maybe if you have a $10,000 account, then you can put 0.27, right? You only risk $100. So 0.27, and then you get $161. Okay, this is based on a $10,000 account and you wish to risk 1%. Okay, then again, some people say, but I want to risk 2%. Okay, then you will risk $200 if you have a $10,000 account and you have 0.55. So this is how you do the calculation. Okay, then you get $238. Okay, so that's how you do the calculation to know which lot size to enter this kind of trade and how much that you can actually achieve in trading Forex. Okay, so I hope that is beneficial. So I hope that will answer some of your questions. So do not rush, okay? Always learn the basics, the foundation, the strategies before you actually put your initial investment. Because I know many people blow their accounts for many reasons. And most of the reason is not managing this risk and reward, over leveraging, because in Forex you can leverage. That's why you can just put the one lot, even you can put one lot here, even if you have a $100 account. Okay, then it will wipe out your account almost instantly. So you need to understand that. So I hope this is useful to you. Okay, so if you have any question, just feel free to reach out to me. And don't forget, I still have the online course running, which is free, okay, for you to get started with Forex. So see you and goodbye.